like here, you could have done this as a trigger point. If this continues to hold, you can get out. You let that hard close right there, right? So then you could move this here. And you can see the collapse against the trigger point. So the trigger point is there, the hold is there. Right? But that's just trend, right? It's just the way we look at trends is people buy trends. Trends are not to be bought. They're used to be exits. Just like if you were in a long from here, right? Like you're in a long, say you bought this, for example. Say you said, oh, I'm going to buy this, right? Like that's the hold level. Forget your target. Now we're in a long, right? So you're in a long here, right? You create your first trigger point, which is kind of the low of the move right there. So you have your trigger point right here for a long. So you've entered a long here. You have your trigger point. Get out of this trade once this breaks. Hits target. You should be out of the trade, right? Your trigger point is your trend. Like that's it. You should be out of your trade. Your target was hit. If you're waiting to see if it's going to go up higher, well, there's your exit right there. If you're in a long, you go there. If you want to fray it out once, you can fray it out once here to that point there. But then you should, at that point, you've frayed it out. You're expecting it to move up. If it breaks this a second time without going over this hold, like you're out of the move right there. You should simply be out right there because this thing's about to pull back. And it does right here. It pulls right back. Yeah. You have your profit cap, and if you're gonna try to justify it based on like larger information, right? Like if you're gonna try to justify it, then you have to either have your target or your profit cap release you from the trade. You should either hit your target or you should release your trade on your trend, which is your trigger point, because you're just still in distribution or accumulation on the other side.
Yeah.
Like this trade here, you clearly have an untested level. Like this is clearly target. Like you enter this trade back here, this is clearly target. There's nothing else left. Like this is already tested. This ladder is breaking here. You're polarized to here. You have nothing left here. So you hit your hold level. You enter long, right? Your target is clearly here. So again, if you move back to this trade and you enter this untested hold, you have the creation of your trend. You can stay in this until your trend breaks or until your target is hit. You might not have this as a target. You might have screwed it up and you might have said like, oh, I think this is target right here. For whatever reason, maybe you screwed it up and you didn't see this. You should still have a trigger point, right? And just like I said before, you can array it out once, right? Oh, something is hit. I don't know what. Something is hit. I missed this. Okay, fine. I have this here. That's fine. I can allow one trend to be arrayed out here because on a higher time frame, this is just going to create, like we're on a 5 minute, maybe this creates the 15-minute right here. But once that breaks, like, and the hold level is holding, your target was hit and you're breaking trends. Like it's just kind of, common sense at this point. Like, hey, I've arrayed out my trend. It's breaking once, it's breaking twice. A hold level is holding me down, right? Like, you should exit the trade there. And if you're really stubborn and the hold level gets hit again and your trend is still here and you're losing trend, also, it's kind of like you deserve to lose money if you're not paying attention to these things. We don't deserve to lose money, but you know what I mean? Like the trade deserves to go against you because you're just clearly not paying attention to the signs that are showing to you. Like there's your trend, which is your trigger point. So if you're not exiting on target because you didn't have it, you should have exited on your trigger point. And even if you did array your trigger point out to even a higher time frame and say, oh, okay, you know what, I have a higher time frame trigger point. Fine, you have it right there. Well, you should probably exit that trigger point then if you hard close it, right? So either here, and then you can array it out again. So you're on the 5 minute arraying out for the first time to the true 5 minute mark, right? Once you lose this trend, like the move is gone. Right there, you should be out. Oh, okay, maybe right there. Right there, you should be out. Like you're long here, your trigger is executed, your target was hit, you missed your target, your trigger point is now folding. You have to be out of this trade. Like one or the other. You either go for the bigger number one or your trigger point releases the trade, which is exactly what happens. So when you mark a body, you're just marking a smaller time frame. Yeah, you're just marking something smaller time frame. So that body is right here on the smaller time frame, like the actual value itself. And then even if you were on the 1 minute candle, you have now. I don't use the micro time frames. So you can go all the way down to like 5 second candles. So even like a 1 minute body can be a greedier level. Again, always being that understand the point is that this is going to be anything under this is a hold level because hold levels, they exist. Like even look, here's a 1 minute candle body. It's probably touched. Yeah. And it is, right? Because this is like a 30-second valley. So there are actually time frames that are used below the 1 minute, but there's no real point for us as traders to look for those. You're talking about the difference between making 0.82 and 0.83 to not being filled. So if you were to use like 30-second valleys, you might get a 1% better entry at the risk of missing the move. So we don't use those micro time frames. There's just no relevance to them. Now, that doesn't mean they aren't used. It means that there's a certain point where there's no time frames left. And when you get past the 1 minute, you're talking about like 1 to 2% difference with leverage considered. So the difference between 0.8 versus 0.81 or 82 versus missing the move completely because the bigger level was used. So when I'm marking bodies like that, I'm just simply marking the body because there is a lower time frame. So even on 1 minute candles, we can still mark bodies, right? We could still mark this. It doesn't mean it's going to get hit. No, because again, now you're talking about the difference between missing the move completely to make a trade that would be 82% to be 83%. There's just no value in using those smaller time frames. Just like this, like, oh, this is a great trade. Could we have used a smaller time frame to find the exact moment? Yeah, but what are we even talking about percentage wise? Like, let's see.
I guess
0.2 versus missing a move that's 110% for a better entry that's 0.02. You see what I mean? So when I'm marking the bodies of candles, what I'm doing is I'm just marking a valley on a different time frame.
Yeah, you're shortcutting to a lower time frame.
Yeah.
But I guess my question kind of was, Jared, so let's say, for instance, we were looking at a 5 minute candle there, and we're looking for a hard close. Like, say, for instance, in Origin, we look for a hard close of the wick, say, for instance. So I'm guessing that you'd be looking at the hard close of the entire 5 minute candle, wick included, not just the body.
The bottom side of whatever that candle is. So it has to be the bottom side of the candle, not the bottom side of the wick, but the bottom side of the body.
Right.
The wick won't be included in that. The body is what's important because the body is the creation of the valleys and peaks inside of there. The wicks are just where it went. The body is the creation of the actual wicks, peaks and valleys. So like the bottom is the opposite side. Just remember that. I know you know that, but just remember that just in case you're not aware. But the bottom of the candle is...
The only reason I was thinking is just like, say, for instance, there, you can clearly see a hard close of this candle, but not so much this.
Like, this is the bottom side of a distribution candle. This is the bottom side of an accumulation candle. So they're opposing sides. So just as long as you're aware of that, like this would be the bottom side. This would be the bottom side the other way. They're opposite sides based on if it's accumulation or distribution. So just be aware of that. Like the bottom side, if you were closing above this level, it would have to close the bottom side here, right? If you were on the opposite side where it's distribution like this level here, if you're hard closing this would be the bottom side here. Like that candle right there would be the bottom side. But the bottom side, like it would always be the bottom side of the level. You know what I mean? So it has to be above this or below this, which is opposing sides. Accumulation, it's going to be the bottom side is here, as to where that would be the top here, which is the bottom on distribution, which I know you already know, but just to make sure. I think that's important to understand that you don't enter a new trade on that. Like that wouldn't be where you enter a new trade. Like, okay, for example, where's your polarity in this move, right? Like your polarity would have been back from here. Like you can enter long above this level if it hard closes, but you wouldn't be like, okay, here, let me rewind. You wouldn't be entering long, for example, you wouldn't be entering long on the close of that, because this hold level over time is just going to continue to hold. So you have to, like, this right here is the polarity, because there's nothing left untested above it. This can't be polarity because simply you could just be like this, or even like this. Like this is the problem we're running into, right? Is like, not you guys, but in this trade is look, larger time frame. So you're just missing the larger time frame there in this trade. If we did it like that, like if we were saying, oh, this is polarity, well, what you missed is the ladder, because anything under this can be a hold level. So as long as you're staying underneath this, you're still on a hold level, right? So even if you were to go to the 1 minute chart and say like anything under that is still holding the move, which means it would technically have to hard close this level here, even on the 1 minute. So right here, which is the 5 minute of the other time frame. So you'd have to hard close over this level then, right? Which you never do, which creates your next point of polarity, right? So then this is gone, right? Then you actually have the polarity right here. So then you can go here and say, okay, it has to hard close over that. So you could enter long right there or exit a short right there, like above this level. So you could enter long above this or exit a short above that. Just like you could do the same thing here. Like this is your level here. You could enter a short below this or enter a long above it. If it's hard closing, that time frame that is created on. You see how we justified the exit on his trade and we justified the next entry, right? You know, you've got this right here, right, which is hit, which gives you some range between here and here. So you can start here or you can go to this and just find your greediest level. So then you could go there and it's like, it's pretty simply right here, right? Like that's your next. There might be something even greedier. We can continue to check. You've got that there. You've got this here. So we have to find something even greedier or go back to the higher time frame. So you actually have this right here. This is tested though. Kind of sucks to use it. That's tested. This is not. So we actually kind of have to use the higher time frame here again. And there's nothing on the hourly. So let's make sure we start there. So yeah, there's nothing on the hourly ladder here. Also could come back all the way up to here. Possible. How likely? I don't know. I would want to see this broken first. So now I can say, all right, let's start here to see if there's anything left there. So this, nothing left. Okay, let's go smaller time frame and see. This right here, nothing left. Okay, so this is guaranteed true. So now we are in this range here. Okay, good. Let's go start the higher time frame there. And let's mark this as the greediest 15, right? And then we're going to go here and say, okay, that's kind of tested there. Well, it's not kind of tested. It is tested. So you've got something like that there. Go back to the higher time frame here. That's tested. You can't use this. I mean, you can. It can continue to hold this level. It's going to confirm a ladder. You can use that level. I just don't know how much I like that. I'd much rather use something like this. And then in there, I'd much rather see if there's something else. So this is the valley backside, which is tested. And the front side is already tested. So you're here. You're right here, which is already tested. So this is kind of your moment of polarity is right here. This is already tested. This double range is tested. Then you're kind of up to here, which is not tested on the front side, but the back side. So you've got kind of this, stagger right here. Now go back to Pat's trade, which was from this perfect moment right here. He entered perfectly right here. And we said, okay, how do we create these trigger points, right? We remember we used the 15 minutes to 15 minutes. So this is, I believe we must have been right here, 9 a.m. Yeah, so he entered somewhere right here, right? Like, oops, he entered somewhere on this. It was like the perfect touch of this right here. So that's where he was. We can delete this. Fine, that's the next short. It doesn't matter. We can delete that. That's where we said it was going to kind of go earlier, and we create this 15-minute trigger point, right? Inside of that 15-minute trigger point, we had a 5-minute trigger point, which was U to U, which creates there to there, 5-minute trigger point. So we're going to go yellow for the 5-minute like earlier. We're going to go purple for the 15 because that's what we used earlier. And then we're going to go green for the 3-minute to the 3-minute. You have 3-minute to 3-minute here, which hard closes to there. And we'll change this green. Recreate this a little bit here. So then we go back to this trade here. And we're back in that same scenario of trigger points versus number ones, right? Because we know that large time frame, it's going to microcycle back and create another moment of polarity somewhere against a level like this right here, which we could have said was like this right here. Fine, we can use that for now. Not going to worry too much about it. Really, it would have been here at first. So let's mark that. So go back to this and let's mark his target as well. So the 1 minute right here, I believe he had the hourly, but fine, we have target there. Number one, greediest untested hold, gets hit. Remember, we were around the 3-minute candle closing because it would have been close to 10:30 when this thing was closing. I remember that. So we have the 3-minute candle here. We have a 3-minute trigger point. We're saying 10:24. So it's about 10:27 now, right? If we start to float through this sideways, we are going to be breaking that next 15-minute hard close. So we are going to be swinging up to create kind of our next point here in the ladder. So that's exactly what we do, right? And even this yellow was our 5 minute. So even, the final 5-minute candle, we've broken the 15, which is the purple. Like we already had this break of the purple, which is creating the test of our next level. Trigger points, right? Like you can see how they're easily justifiably used here against our time clock, right? Like, oh, we were in this 10:27 moment. That means we're going to hard close a 3, can means we're going to hard close the 5, and we're opening above a 15. So it's very easily justifiable to exit this if we didn't use our target here, which again is quite okay. The difference in profits between here is 1.17 versus here is 1.07. So you're giving up 10% to see if this thing can continue to distribute, which in my book is actually okay. Even if it was a 1% versus 1.17, I still think it's okay, because alternatively, you guys are going to be just picking a level and exiting. You could pick this level. You might have picked this level. I don't know. You can just pick a level and exit, and that's fine. But the number one will be confirmed once this is kind of broken, right? So then that breaks. It goes up there, pulls back. Next polarity moment, possibly here. This is tested. And that's tested. This is holding the move. So you'd be something like this. This is, the range is tested. You could come all the way up to here, 88.38. This I can guarantee you is tested because it punctures right the hell through. So that's a first test right there, a second test of its range right here. So this has 2 range tests. Possibly you can come up here. What doesn't have 2 range tests? Backside range test, front side. That does. Backside, front side. And I would look for probably the greediest point in here that can confirm the ladder. Like we already know it goes somewhere over here. So that's not the point. The point is trying to make the correct decision about where could this go. Yeah, it could go right here. It goes over top of that. It actually does go to something like this, and maybe even here. Oh, okay, so it actually does go to its level perfectly. So we didn't even need to go through all that. We could have just marked the level and, again, trusted our TA, and it actually goes to the level perfectly. And that'll be the next ladder point down here. It's polarized here to there, right? So it actually, just trust our TA. I mean, we should have just done it properly instead of trying to pick a 2 combination level. Greediest point, as always. Goes to that, which we will now kind of, maybe we just delete all of this and then look for the higher time frame. Do we have a 4? We do. It's not much, but we do. We have a 4 here. So we're going to mark this yellow. Trigger point to get out of any shorts, which is there. So we want to make some interior trends here. That's pretty much the same trend. So we definitely want to make an interior trend from here to here on a 15 minutes. So we'll just color this maybe gray. Create our last polarized level, which is here. See if there's any other polarized levels in this move. It can go here. After this, it's gone though. So if this trend is going to hold down, this yellow trend is going to be off that level. We've got interior to interior. We've got our entry in here, which is the 1 minute. But we move that because it's already tested now. We don't need to use it, but we can mark it here just for the example. It's fine. It's right here. We've got our trend. A larger time frame. We've got our level that's going to pull back. Oops, I don't want to move that. Now I need to make the trigger points on the bottom, right? So you're going to be like, well, we'll start highest time frame, right? Like, let's not make that mistake because I'm starting to do it too now. A 15-minute hard close right there, which is great. So now we need to make something off of here for this interior trend. So you're going to go 5 to that. So we don't really have anything yet. We have this. So that you're in the back in that same scenario. Back in that same scenario where if you lose this trend, the move is going to move down against, can't be there. So it's kind of tested. Kind of looks like it's just going to break down. If this can't hold, realize that you're coming from here down to here. So this is a full liquidation right here. So you have to realize that. So if this doesn't hold, you have to get the hell out. If this starts doing some kind of thing where it's like this, like it comes down to this level and it holds like this and it's kind of just meandering here, kind of the second it goes like this, I would expect it to just dump straight down. Like that's going to be where you see something like this, where it's just like a straight dump down, to its level. So you have to be, you can long this, just be careful because your profit cap is dictating that you can come from here to here. So could this hold? Yeah, it could hold. Just like this. Could it hold? Yeah, it could hold. But if it doesn't, this is gap to here, and then this one is gap to here, right? So like your better entry is this. And then if this doesn't hold, obviously your higher time frame cap, down to whatever level we had down here. There's some level way back here.